Trump's historic tariff announcement spiking fears the policy could trigger a global recession. It stunned global investors and prompted a large-scale stock sell-off where all three major indices posted their worst day since 2020. Financial advisors in southern Arizona are not pressing the panic button yet for investors here in the Old Pueblo.
13 News reporter Sean Mahoney joins us in studio with more of a breakdown on what this market drop means for investors and their savings. Hey, Sean.
Hey, Mary, Dan. Well, one of the biggest concerns for the average Tucson resident or employee is what this means for their 401ks, their retirement savings, with many vigorously checking their portfolio to see those major drops you just saw. But to really understand what to do next, it depends on your age and how close you are to retirement. I sat down with a local financial advisor to see what the next step should be from baby boomers all the way down to Gen Z.
They tend to not look at it when it's doing well, and they look at it more when the market's tanking.
And with this week's tank, the focus is high on retirement savings. So we asked financial advisor Drew Blease how each type of Southern Arizonan investor should react to these changes.
And right now the sale is excellent. And usually people want to buy things when they're on sale, except in the stock market, people get afraid when it goes on sale.
The word fire sale is how Gen Z workers who just started contributing to their 401k should look at this.
Stocks are on sale. There's no doubt about that. So to me, I'd try to maybe up your percentage in your 401k. Don't be afraid. It's a good buying opportunity if you've got the right time horizon and can handle the volatility.
It's a similar concept for those millennials in the workforce. Still a lot of time to invest, but the larger amount they have saved may make those workers hesitant. And Blease says how you react now is how you should plan your future investments.
If they panic when the market goes down, then they should definitely take less risk. Add some bonds, get more diversification, because it's, you don't want to be panic selling.
Time is the ultimate luxury in these market downturns, but that view changes the longer you are working.
In the long term, you trust the stock market that it's going to go up, it's going to go down. But in the short term, do we have an opportunity for it to go up enough to sustain us?
That's the reality for C.T. Revere, who says he is planning to retire within the year, making these recent changes even more nerve-wracking.
We're pretty close to retirement, and we can't afford to take the risk of losing that.
Blease says the goal is for people like Revere to have diversified their portfolio ahead of time, but if you haven't, it's not too late.
If you're down more than you want to be, use the next rally to diversify a little bit more, pick up some more conservative stocks, maybe some more bonds.
And for the baby boomers who are living on their savings instead of contributing to it, Blease says it's extra important not to panic now and look for low risk options moving forward.
Today will be one of the worst days that we have probably this year. So you don't want to, panic selling is, it usually never ends well.
Now, one alternative some may look into because of this is target date funds, which invest differently based on your age and kind of out of your hands, so to say. But Blease says his opinion is to diversify your portfolio yourself or with your financial advisor to give you more knowledge of the market and increase upside. Reporting live in studio, Sean Mahoney, 13 News.